All right, welcome back everyone. Today is Tuesday. As usual, we do have the Forex outlook. So we're going to be looking in gold, we're going to be looking at euro dollar, Aussie dollar, pound, and how to trade them during the week ahead. And of course, on tomorrow, on Wednesday, we're going to have another webinar that we're going to jump through and have a look on how those trades are going. Just a heads up, on Thursday, I'm going to make that very clear. On Thursday, this Thursday, the 21st of August, we won't be having the webinar. Okay, so from 4 to 5 p.m., we won't be having this webinar. We will also send a message on the Telegram, so you guys don't wait for me. You can have other plans, so I don't want to disrupt anyone's plans. It's just one of my family members' birthday, so I will be away the full day, spending time with that person. Okay, and of course back to normal on next week without a problem. Cool. So today we're going to be talking about the Trump and Zelensky talk. So basically the whole idea of that talk, with that talk, was to stop the war that has been going for more than 4 years. Okay, the war started in February, I think it was 23rd of February 2022. So it has been going for around 4 years. Okay, so that's pretty big. 22, 23, 24, 25, around 4 years. Also, this week it's a very important week because we have Jackson Hole Economic Symposium around the corner. So what should we expect? And also what it is, the Jackson Hole Economic Symposium, because lots of people talk about that and they don't even have a clue on what it is. So I'm going to just give a brief explanation and show you what it is. It happens every year. Most likely you guys have seen that. I'll remember that from last year, 2024. So it's a very, very important, basically it's a very, very important central bank meeting, but I'm gonna let that to be discussed more in depth once that comes to time. Then a few trade ideas on euro dollar, pound dollar, the Aussie dollar, and of course gold. I do see quite a big potential coming over in the next 4 months, and is basically the end of the year, into those pairs. So hopefully I can give it out for everyone in a simple way. Okay, I just need to admit them. Perfect. Cool. So first thing is Trump and Zelensky. Okay, so Trump and Zelensky, they've talked on yesterday. Yesterday was Monday here in Australia. So they had a talk, had a chat, best friends. So it was quite an interesting chat, right? It was because I remember when we had good morning, Suleiman. Suleiman always says good morning. That's very good. Thank you so much for always being so kind, Suleiman. It's very nice of you. Good morning. I hope you had a good rest and you have a good day ahead. Okay, so for those who just joined, we're going to be talking about Trump and Zelensky now. So Trump and Zelensky had a chat before already. So they were talking for quite a while at, when was that? Was maybe 5 months ago or something. And they were basically Trump was basically trying to stop the war, because what Trump did was he talked with Putin first, and then he went and talked to Andrei Milikan. Says, your analysis is the best for me. Happy to be here. Well, thank you so much. Awesome. So then Trump was having a chat with Putin first. And then Putin was like, "There's no problem." Okay, so this was the first time they've chatted. So let's see, when was this? That's on ABC. So that was March. I remember was on the very beginning of the year. So Jan, Feb, March. So there's more than 5 months already that they had this first conversation. When Zelensky come to this, he was, I'm sorry to say that, but he was very rude. He was really, really rude with Trump because Trump was trying to help him, was literally trying to help him, talking with Putin and talking with him and trying to make a peace agreement. Okay. So Trump was basically, listen, Russia is twice your size, has triple of the people that you have. You should stop. And he's like, no, we're not going to stop. We're just going to continue. We're going to go and fight until the end. Well, not a problem. So he was kind of a rude person. And then after 5 months, now here we are, Trump had a chat again with Putin and also on Alaska. So I put it here, Putin, Alaska. So they've met 2 days ago, 3 days ago, sorry, and they had a chat. So they've met into Alaska. So Putin came to Alaska. Trump went to Alaska as well. So they've met in there to have a conversation about a few things and also about the war, okay, and to have the committee as well. So that was pretty much it. Then on the same night, Trump called Ukrainian President Zelensky and say, "I want to have a chat with you on Monday at the White House." Well, then here we are having them a chat on that. Okay. So what was discussed? That's the main thing. Well, the first thing it was the security guarantees and the U.S. role on that security guarantees. So the Ukrainian president Zelensky, he say that the U.S. will help to coordinate and also will help to to participate in the formal security guarantees for Ukraine. So with the details of that deal hasn't yet been formalized, so is expected to be within the next 10 days. So next Wednesday, next Thursday, around that time. So, but anyways, in my opinion, I think these guarantees will likely include that the U.S. military AID package has to be deployed to Ukraine. I think that's like $90 billion US dollars, and that will cover all the aircraft and the air defense systems. And also, of course, the US, Trump also agreed to purchase Ukrainian drones on exports resume. So it's, you know what I mean? Like, of course, they want to stop. Of course, Trump wants to stop, but he wants something, and of course Zelensky wants something. So it's a business. It's 110% a business. So yeah, we stop if you buy a drone from us. Okay, not a problem. I give you $9 billion covering aircraft and air defense systems for you on the security guarantees. As a security guarantee. So that was the first thing. The first thing. Okay, then what they tried to do is basically they tried to do a NATO style security framework. So Trump proposed that the security arrangement reassembling NATO guarantees for Ukraine, but is stopped short of advocating Ukraine's formal NATO membership. Basically, the European leaders reportedly supported developing an European-led security buffer. So that was the first thing. Now, the second most important is the potential. What would be the potential implication, for the whole world and the US dollar? In my opinion, there's two things. The first is the global. It's going to bring back. It's going to bring back the global stability and the geopolitical order. Because think with me, right? How many? I don't even know. I'm gonna ask Google. How many people died on Ukraine, Russia since 2022? 14,000, 13,000. Yeah. So that's really bad. Oh wow. Yeah. 2,234 children and a total of 32,500 and something that was injured. And then killed was 14,000 and then 726 children. That's really, really bad. Wow. Wow. See, February 2022 to July this year, 2025. That's really, really bad. Well, unfortunately, something that has been going that long for, this definitely has to come to an end. But anyway, so I think that the global instability and also the geopolitical order will be back. So if everything gets formalized, like these security guarantees, they could date further Russian aggression and stabilize the Eastern European front. Most likely, if we do have, of course, US involved, that would reaffirm that the US President Trump in coordinating multinational security potentially would stabilize the whole global market. And it's not only US market, not only Europe market, nothing like that. And I'm not talking only about financial market. I'm talking about the real market, like food. I'm talking about energy, talking about oil prices. I'm talking all about these type of market. Okay. That these are the main parts that have been disrupted since we had this whole war started in 2022. Now, moving on, of course, economic and US dollar would have an impact. That's without a doubt. I think that if the US, like, actually, if Trump actually does what he said he would do, I guess that the dollar will strengthen. Okay, not quite a lot, but a little bit. But it will sustain the geopolitical tension on ambiguity. Okay, like basically, there's one thing that they won't probably be able to resolve is the territorial disputes. Okay, that if for some reason they start to fight in another way for this reason, for the territorial dispute, that could inject a lot of volatility into the market, especially into risk sensitive asset classes like the US dollar, like Australian dollar, New Zealand dollar, S&P 500, Nasdaq, gold, oil, all of the bonds, all of the central banks, etc. So do you guys have any questions about this topic, or is it like clear? Do you have anything that would be specifically that you want to ask about? If you may have questions, you can just ask me now, so we can move to the next topic. I don't think anyone have questions. That's okay. So, but that's about it, pretty much. They had a chat, they've discussed it. I think that the best part of it is that from 5 months ago to now, Zelensky saw how he can't handle anymore this war, and it's not about the money. It's about people. He can print money, he can buy new weapons, he can do whatever, but he can't bring back those people. I remember when he was at the front line, etc. Sorry. Oh, one. I remember when he was in the front line, like that. Show you. There's lots of photos of him, like actually in the front line and being on the places, etc. He saw how bad it is. I mean, there's no need for someone to tell him how bad this could be, so Yeah, it's very hard. Lots of families and etc. So I think that the best scenario is for them to come to an agreement and just stop that. Okay, just stop that for that's it, done. Because that's actually one of the points what Trump said. Trump said there's no point of me coming here and doing both of you, putting both of you in a room and make you agree on a ceasefire. There's no point of doing that, okay? Because the ceasefire is always breached by someone because they can't stop. So I wanna go deeper and resolve that matter in a better way. Okay, so that's why he's like, okay, listen, Zelensky, you want me to buy things from you? I'll buy from you. You will buy from me, and that's it. We stop. So Trump is actually putting him face to stop this war because for Putin already say, look, I stop. There's no problem. There's literally no problem on that. In the last 5 months back, he already say that, like I can stop. There's no problem between me. It's just him that is going to be doing that. And will continue to try to fight with me. Okay. Now, this is it. That's how much of information we have so far. Hopefully, I've made clear for everyone, and we can move to the next topic. Now, we have the Jackson Hole Economic Symposium around the corner, and first of all, what it is. Okay, what is that? Well, it's basically an annual event. Okay, wait a minute. That's a perfect picture. Right there, we have Uncle Paul, Uncle, I don't know, I think this is Hiroto from the Bank of Japan, for looks like it is. And we have Lagarde. So these are the, right here we have Euro, US dollar, and Japanese yen. If they're having a chat and they want to do whatever, they can just do. Anyways, so what it is, so basically it's an annual and it's a very high level central bank conference, okay? And it's held on the Jackson Hole. I think it's on what it is. Where is it again? Let me double check. It's the it's a festival. I can't remember where it is, but it's on USA. So it's on USA, and they have the Jackson Hole Economic Symposium. So it's a very invite only 3-day forum, and it's hosted by the Federal Reserve Bank of Kansas City. I remember it. So it's on Kansas, okay, in the Jackson Hole, Wyoming. So the attendees typically include central bankers, finance ministers, leading economists, and of course a very few selected media. It's around 120 participants in total, and the convening objectives is to foster open, candidate discussions on pressing global economic issues like monetary policy, financial stability, technological impacts, and of course growth constraints, and most likely this time the tariffs, and etc. 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 So it's basically that pretty much. Oh yeah, I got it right. Here it is. Oh, I'm good on that. I just look at his back and I knew who was. So that's cool. Anyways, so that's basically it. So we're gonna be having that for 3 days. A nice shirt, Jerome. Nice shirt, Uncle Paul. Anyways, so that's pretty much it. Now, why does that matters? Well, there's basically two main things. If we look for policy in the market signals, that's especially from U.S. Federal Reserve Chair, like especially from this guy here that you guys seen on the screen, it often signal upcoming shifts in the monetary policy into that day. Okay, so if he planning to do any forward sort of planning, he's gonna most likely come across someone and is gonna tell that, like, oh look, we're planning to cut, blah blah blah. So that will get alarmed pretty quickly. So it's and of course, such as rate changes or economic outlooks, which market rapidly, look for clues. This will alter already. CME Fed Watch 2 would alter the bonds and the US dollar pricing, etc., etc. So it's very important. Now, looking historical, what was the impact historically over the years? As I say, it happens every year every year. So it happens every year for 3 days for the month of August. Over the years, they have the speeches, right? Like this lady is doing here. Well, that's not a really great image, but you know what I mean. They have these speeches there. So yeah, we don't have any other images, but anyway, so you can see here we have these speeches, and over the years, speeches and papers from Jackson Hole have directly influenced the global central banks and policies and market expectations. So there's a lot of impact. Okay, and as I say, majority of those impacts are into bonds, then get repercuted into the currency, then get repercuted into the economy. All right, so if Jerome Paul gonna give us I don't know, a 15 minutes speech, depending what he say, we're gonna have some really interesting reactions into the market. Okay, now how can that affect the FX market? Well, we have two type of volatility on this case. We have the short term volatility and we have the long term volatility. For the short-term volatility, I would say that majority of the market participants, especially in Forex and bond traders as well, they already anticipate what the market and how the market will react. I would say to shifts in the tone or the policy direction. Okay, I think that's the most clear way I can express that. So, depending on the policy direction that someone, it doesn't matter who, if say Jerome Paul, Lagarde, Kuroda, what are the other ones? The other central banks, whoever says that, it's going to be a policy direction change. And it's going to be pretty interesting to see. And also the tone that they say. Are they like scary about inflation? Are they looking great for the next 5 years? Are they looking bad? How are they looking? How are they feeling about it? Cool. Of course, a hawkish tone, like maybe that they're going to be, well, not a hawkish tone in this case, but a dovish tone in this case, that it's going to be cutting interest rates like the Fed. This will generally weaken the US dollar. Does anyone know why? Let's see if you guys are paying attention. Does anyone know why that I've discussed that quite a few times already? Anyone does know why a dovish would be repercuted as a okay, we have some answers. So we got Suleiman saying rate cut. Okay, that's great answer. Anybody else? Give one, give two, give three, and that's it. Close. Yeah, that's correct, Suleiman. It's about the rate cut, guys. So congratulations, Suleiman. So it's all about what will be happening next into the rate cuts. So the next week, what I want you guys to do is go into the CME. Let me grab my blocks. Okay. So as I say, current target rate is 424, 425, 450. We have an 83.6% chance of 25 base points cut and a 16.4% chance of no changes. Now, take a screenshot, whatever, or can always send that to you guys. Let me just stop there and send this to here. So there you go. So you can go to the website, take a screenshot, and after Friday, so next Monday, come and have a look at this again. I've been right the last 3 times I say that this is going to be different in a week, and I'm probably going to be right again. Okay. Now, what this will change will be this guy here. So whatever moves there, oh, sorry, let me take these red boxes out now. Whatever changes there will be having a change on here, okay, on the DXY. The XY has been quite volatile. Ignore this strength here on the week. This is not true. This is completely wrong pricing. Anyways, so it has been quite volatile in the past, in the last month. So basically, from now to the beginning of this month, it has been very volatile. So, what I want you guys to pay attention at is how that change, how the CME Fed Watch change, that impact on here. When there is more chances of cut, and there is all the chances of higher cut. So in a sense, this is pricing for a 25 basis point cut. 2 weeks ago, actually 1 week ago, no, it was 2 weeks ago, we had another webinar where I showed everyone that we're 90 something percent pricing for 25 base points cut, and like 5 or 6% or 3% priced in for 50 basis point cut. So the market did no doubt that we would have a cut. And then now we have 16% chances of no cut, no changes. And that's the whole point. Okay, that's really the whole point of it. It's about checking how the market is pricing. So in this case, it's pricing a cut. So most likely we're going to have a cut because the majority is believing in a cut. Then there's only the minority willing to, say that there's going to be no cuts. So if that changes, if the no cut is now 80%, the US dollar would be probably very strong. If there is another possibility of a 50 basis points cut and this no cut disappear and this 16% goes to the 50 basis points, most likely we're going to be having a very, very weak US dollar. Okay. My target for the UDXY is $97. So did I make myself clear? Do you guys have any questions, or can we go to the trade ideas now? Let's see if anyone have any questions, and we can move on. No questions? Sorry, I was just drinking some water. Oh, so I've said about the short term, and now the long term is it's going to be basically the cumulative impact of the policy shifts discussed at the Jackson Hole that will be realized and then can set some lasting trends in into the FX market. So hopefully that's clear for everyone. Let's see, we have a chat message. And Derry Millicon say that when are you expecting DXY to retest 97? Well, that's a question I would love to have a crystal ball. I don't know when. I don't know when, but we probably can see. I probably can see that happening in the next couple months. Okay, it's not that far. It's really not far. So if we get, for instance, let me do something here. Oh, sorry, that's 99 then. There you go. So if we get from the 99, right, from here, from this pricing to 98, it took 47 bars. So that means 47 hours. So that means pretty much 2 days. So that could happen like that, very quick. Okay. Very, very quick. As I just showed you, this is a 1 hour chart and it happened in 47 bars. So that means 47 hours. So it's 1 day, let's say 2 days. Okay. So it happened pretty quick. But with the Jackson Hole, we can expect some sort of volatility between ups and downs and not a momentum. Remember, I've mentioned to you guys the difference between volatility and the difference between volatility and momentum. Momentum is when the market has a way to go, so it could be long or short, and volatility is when the market doesn't know where to go, so it's just going to go ups and downs. Basically what it's doing at the moment. Okay, it was at 98, went to 97,600, now back to 98,127, then back to 97,800. So it doesn't have a momentum, it doesn't have a price in mind to go with actual strength. Okay, so with the Jackson Hole coming over, we probably can have a lot of volatility, but no momentum in a sense. If the market actually listens or something about the Fed saying anything, then yes, we're going to be having something that it's going to move very strongly to one side. Only that could be potentially down to 97. So it could possibly happen this week, or it could possibly happen in the next couple months. I'm expecting that to happen in the next around a month and a half, because there's most likely a possibility of the US dollar index coming back above 98,500 and then going down to 97. Okay, did I answer your question? Did I make that clear? Does anybody have any more questions before we move on? No questions? Okay, that's all right. So let's move on to the trade ideas. Now, I've separated a few currency pairs, so euro dollar, GBPUSD, AUDUSD, and of course gold. Has anyone been trading those currencies this week? So Andrek Millikan says, do you see 97.7 is standing as a restriction? No, there's no restrictions here. Look, there's literally points for the market to just, it doesn't matter those lows. The market can just go. There's no problem on that. So euro dollar, pound dollar, Aussie dollar, and gold. Let's have a look at euro dollar first. I already have done everything for you guys, so just gonna pops up. There we go. Let's go zoom out. Okay, so that's a euro dollar chart, 1 hour chart. For those who have been following me for a while know that I like to see the boxes into the chart. So we have a few boxes here. We have some boxes to the downside. We have one box to the upside, and we have a potential target for the euro dollar at around 1.18. Let's call 1.18, around 118. Okay, it was more likely 1.17500, but yeah, 1.17500, 1.18 is my target for the euro dollar. Now, why is that? Well, with the US dollar being quite weak in the last couple of days, I do believe that the majority of the market is looking to buy euros and sell US dollars. There's other few reasons for that, of course, because the market is pricing at least 50 basis points for the US dollar. Okay, so 17th of September is going to be the next meeting. So next August, September. So it's 83.6%. Then on October, we have a possibility of no cuts now. Okay, so there's a possibility of no cuts. And then in December, there's a possibility of a 25 basis points. So the market is pricing 50 basis points cut. It was pricing 25 in October and 0 in December. So basically just switch it now. It's pricing 25 in December and no cuts in October. So it will be a cut in September, pause in October, and a cut in December. Okay, that's pretty much it. Now, coming back to here, my ideal scenario for the euro dollar would definitely be buy into pullbacks and wait for the target at 1.20. Before that, what I say to you guys is that there is a possibility of the DXY coming back at the 98,500. And that's exactly where I think that the euro dollar will come back down to around 1.16200. So I would say I could have two positions at the market. So I could have a long position around these lows, below these lows, around 1.16200 right here, with my target looking at 1.17500 and my stop losses below these lows. Okay. Why below those lows and not any other low? Because simply if the market breaks these lows here at 1.16, sorry, 1 point, around 1, yeah, let's call 1.16. If the market breaks the lows at 1.16, I'm really not interested anymore to be looking to long that because we've already broke that low. Okay. At the moment, this is the low we have. So let me just do a bit of drawing here for everyone. Let me take this guy out. Let me go with this one. So from here, we had the break of this high. Okay, so this low is acting as our lower low, and this high is acting as our higher highs. Okay, so from there, what I would love to see is a break above these highs and a don't not break below these lows. If it breaks below this low, then it characterizes for me as a switch of character. There, people that call switch of character, I just say switch of character so you guys understand, but basically a trend reversal. Okay. If we get the Fibonacci from the bottom to the top, or entry is sitting below the 61.8%. That's fine. That's completely fine. Okay. Now, there's another way you can do that is just entering at the market price. Okay. So you can enter at market price, but then what will happen is your stop losses would be below this low here, where the next entry point is, and your take profit would be at around 1.17500. Your trade would be much riskier in a sense because your stop losses are very close, and you haven't had yet some move back towards the 1.16, where I think it possibly can come. And based on my analysis for the US dollar index, we can see the US dollar index popping up at that level. Then if you're still looking to wait, you could wait for a better risk reward with a 39 pips stop loss to 127 pips take profit, or you can enter market price with a 43 pips stop loss to 88 pips take profit without a problem. It's completely up to you. It's completely up to your risk management, completely to your entry criteria strategy and your trading strategy. I'm just giving out some of my concepts and my ideas here. My first target would be 1.17500 and my main target would be 1.20. I would definitely be trailing my stop losses once it hits at 1.17500, closes around 50 to 60% of the position, put the stop losses on break even, and maybe look to pyramid positions when the market gets to highs and highs and highs and continue to break the tops until 1.20. So on that, we can probably make around $100 to $150, depending on what money you have on your account. Between $50, $25 to $50 as well, just depending how much capital you have as your balance. Okay. Cool. So that's my first trade. The second trade is the pound. Okay, the pound is being quite of a good trade for us. We nearly got in. Remember, I've mentioned to you guys last Wednesday that the position that we had here would be quite of a good position, but it would take some time to get in. So because of that, let me just extend this. Oh no, I did something wrong. There you go. Because of that, we still have the pound actually trading. We still have the pound waiting for, and my target would be 1.37 300 as I mentioned because of that big box. With the US dollar index pullback at a 197 99, 98. Let me go again. 98,500. Sorry. With the pullback of the US dollar at 98,500, I can probably see this position getting caught like in the next few hours. Okay, the next day or so. If we get stopped out, we already have another position at 1.34,500 that would drag a better risk reward. Well, not a better risk reward, but it would drag a better risk appetite trade, as of this one here is giving us 44 pips stop loss to a 23 pips 233 pips take profit, and this other one is giving us 81 pips stop loss to 279 pips take profit. So it's a smaller reward, but it's still a less riskier setup. Okay, because the stop losses are bigger and the stop losses are below these main lows. As of this one, the stop losses are tighter, and the stop losses is literally just below this support area. Okay, so over here, if you put somewhere around $10 to $15, you're probably going to get out $50 to $55. If you put 100, you probably get out $500 or $400 after commissions and swaps. If probably this position will be held for quite a couple of days. So it's also a great position into the pound against the US dollar. Okay, so far so good. I guess we're very bearish on the US dollar, and I think we'll continue to be if the Fed continues to price cuts. Okay, because the BOE is much more of a less dovish bank at the moment, as with the ECB as well. So ECB Lagarde say that there's no rush. They're probably not going to cut this year, so hence why the strength on the euro. As of the BOE says similar stuff. They need inflation to come back to target, and they need to see the labor market tightening as well. That's probably going to take some time. So I believe that the pound will be strengthening. So based on those approaches. Now, Aussie against the US dollar. Aussie is a risk-on currency, as I've said many times already. We just got triggered on this position. That's great. So the main target I'm looking for the Aussie dollar is Aussie against the US dollar is 68 cents. I've warned everyone about that ages and ages ago. If you've been following me since beginning of this year, you know that I'm looking to 68 cents for end of the year. So my time is getting short. I only have 4 months left. Well, a little bit more than that, 4 months left. And we're still pretty far. So it's going to be an interesting trade heading to the end of the year. Hopefully I can get this one right. Anyways, so Aussie dollar. Aussie is a very risk-on currency. So whenever there is risk on, Australian dollar is really great. All right, it's very bullish. Whenever there is no risk, so it's a risk-off market, Australian dollar is very bearish. Okay. When the US dollar is going down, it shows to me that the market is risk-on and it's looking for appetite. It doesn't matter what is going on around the world. They're not buying the US dollar to protect the capital. So therefore, they're looking to have better currencies into the portfolio. So Australia, I think it's going to be a great position based on how the ECB, how the RBA is positioning itself from the last meeting. They still very data dependent. They very cautious about continue to cut the rates. So in my opinion, I believe that they will probably continue to hold interest rates if we don't see sufficient release into the inflation. Okay, so that's about pretty much it for the Aussie dollar. Looking to target 66 cents first. And if you'd like to, you can target 68, but that's going to be a huge trade. Stop losses are 42 pips. Entry is right now 64,900. Stop losses are 42 pips, take profits 112 pips. This gives us, 1 to 2.6 trade, 1 to 2.6 risk reward. So if you put 100, you're probably going to get $260 back. If you put 10, probably going to get $26 back around these levels. So it's a good trade. It's a good trade. Australian dollar tends to be very consolidating in this period of the market, especially in August when the liquidity is quite thin. But it's going to be a great trade, I guess, as well. Now, last but not least, we got the gold metal. Okay. So just looking at this 1 hour chart, we can see something that is pretty annoying me for the last 5 months, pretty much. Okay. It's consolidating literally since May. It hasn't moved since May. Okay. I brought gold up because I know lots of you ask me about gold, and unfortunately I don't have any ideas for you guys. Okay. Because I don't know how to trade on that. I really don't know. Gold is literally consolidating. I guess at the time of buying gold at the moment would be below the 3,300. Okay. I wouldn't be looking to buy gold above that level, just because in a perspective of, I'm not going to buy gold about 3,300 because gold would never, ever come back to 3,300. No, that's completely not what I'm saying. I'm saying that the exposure would be so big above to 3,300, 3,336, for instance, that when the market drops $36 and goes on my head, I'm going to be crying because the leverage would be so high and I would be on a huge drawdown, 20 to 30% of a drawdown. So I prefer to wait for the drop and then to buy cheaper after that happens. Okay, so that's what I'm saying. So at the moment, I don't see any potential. If gold doesn't drop below 3,300, or if it touches 3,300, whatever, 33. I always get this wrong. Wait a minute. Go here. Oh, there's no dot. Okay. There you go. And then this one. Okay, cool. So 3,300. If probably gold will probably come back down because there's no risk into the market. So market is more like on a risk on scenario. So gold is probably not willing to go higher. So gold only goes crazy when the risk is off. So what we're probably going to see something around that. And then this is a buy area for me. Okay, so this is where I would be looking to long gold when it gets the time. Okay, cool. So we come to another end of the webinar. So we've talked about Trump and Zelensky and how they're looking to stop the war forever. We've talked about the Jackson Hole Economic Symposium and why is that so important and what it is and how does it happen. And also I gave you some trade ideas on long the euro dollar, long the pound dollar, long the Aussie against the US dollar. And I don't have any ideas, so I'm pretty neutral on gold. Unless gold drops below 3,300, I'm looking to buy it. Now, thank you so much for coming today. Tomorrow as well, we're going to be having another webinar from 4 to 5 p.m. And I will be live marking up my trades live with everyone. And looking for high rewards and low risk setups. If you like, 1 to 5, 1 to 10, 1 to 8 sort of risk reward, that's where you're going to be looking tomorrow. Now, again, Thursday, I won't be here. It's a birthday of my family member, so don't expect anything from me on Thursday. And back to normal next week. Thank you so much, everyone. Have a lovely week ahead, and I chat to you tomorrow. Bye-bye.